All right, let's talk about something that can feel, well, incredibly complicated. If you've ever looked into self defense legal protection, you know it's a total maze of different products, big promises, and really confusing fine print. Today, we're going to untangle that maze for you.
So, here's the game plan for today. We're going to start with the big legal problem that kicked this whole industry off. Then, we'll dive into the three different ways companies have tried to fix it. We'll look at a really clever new hybrid model, but also the huge trade off that comes with it. After that, we'll put the top players head to head and finally help you figure out what the ultimate choice really is for you.
You know, this is the heart of the matter, right? A self defense situation, the actual physical part might be over in a blank, but the legal fight, oh, that's a whole other beast. That's a marathon that can drag on for years. And the costs? They can spiral into the hundreds of thousands, sometimes even millions of dollars. Okay, this right here, this is the poison pill in pretty much all standard insurance. See, insurance is for accidents, not stuff you do on purpose. But self-defense, legally speaking, is an intentional act. So you end up in this crazy catch-22 where the very thing you bought the insurance for could be used to deny your claim. Seriously, this one little clause is the reason this entire industry even exists.
So, the market saw this huge problem, this massive gap, and naturally a few different solutions popped up. Let's break down the three main ways companies have tried to tackle this insurance catch-22. You've basically got three different flavors here. First, there's the lawyer on speed dial plan. Then you've got the classic insurance route. And then there's this third one, the hybrid, which kind of looked at the other two and said, you know what, the whole system's broken. We're going to start from scratch.
Let's start with Model 1, the prepaid legal service. Think of it like a gym membership for lawyers. The good news? By not calling itself insurance, it gets to sidestep a ton of government red tape. But the bad news, and listen, this is a huge one, is that if you get sued in civil court and lose, you're on your own. That judgment comes straight out of your pocket.
Now, model number two, the traditional insurance program. On the surface, this one feels a lot more solid, right? You're backed by a huge A-rated insurance company, plus you've got state guarantee funds as a safety net. It seems perfect. But, and you knew there was a but, you're still playing by that big company's rules. And that means you're right back to that pesky criminal acts exclusion we just talked about. The original problem is still lurking in the fine print. So you're stuck, right? Option one leaves you totally exposed to civil lawsuits, and option two could leave you high and dry because of the fine print. So what do? Well, one company, Attorneys on Retainer, or AOR, said, what if there's a third way? What if we just build a better system ourselves?
And this wasn't just some clever new marketing idea. For AOR, this was literally about survival. They were facing that same massive civil judgment gap as the other legal plans, and regulators were starting to breathe down their necks, saying, hey, you guys look an awful lot like an illegal insurance company. They were cornered. They had to innovate or they were going to be shut down. So they came up with this really smart three-layer structure. First, you have the law firm, which gives you that crucial attorney-client privilege. Then there's an association you have to join. And the final piece of the puzzle, the real game changer, is their very own insurance company. It's called a risk retention group, or RRG, and it's the engine that actually funds everything. And this is the master stroke. Because they own the insurance company, they get to write the policy from scratch. You see where this is going, right? They could take that nasty criminal acts clause and just delete it. Gone. That's the whole point of their model. If you write the rules yourself, you can't be beaten by the fine print.
Okay, it sounds like the perfect solution, right? Problem solved. Well, not so fast. Every elegant solution in life seems to come with a new kind of trade-off. This brilliant move doesn't eliminate risk, it just transforms it. And this is something you absolutely have to understand.
So here it is, the big trade. You're swapping one kind of risk for another. With the traditional guys, you're worried about coverage risk, the chance they'll use the fine print to deny your claim. With the AOR model, you have to think about solvency risk. What if this new, smaller, member-owned insurance company gets hit with a bunch of big claims and goes broke? You're trading one fear for another. So what exactly is this RRG thing? Well, think of it as a special kind of insurance company that's actually owned by the people it insures, its members. It's created under a federal law that lets it get licensed in one state, in this case Montana, and then operate everywhere else. It's a really powerful tool, but it also plays by a very different set of rules. And this quote lays out that difference in black and white. You know how big insurance companies have to pay into a state fund that acts like a safety net if they collapse? Well, RRGs are legally forbidden from being part of that system. So if a traditional insurer fails, the state steps in to help pay claims. If an RRG fails, there is no cavalry coming. That risk falls back onto the members.
Okay, enough with the theory. Let's put these models side by side and see how this all actually shakes out when we look at the plans you can buy.
Right away, when you look at civil damages, that's the money to pay out if you lose a lawsuit, the difference is just staggering. The big insurance-backed plans are offering millions. AOR, because it's a smaller pot of money funded by its members, offers a much more modest limit. That solvency risk we talked about, this is what it looks like on a bar graph. But then you look at the other details, and the story flips. Check out U.S. Law Shield with a big fat zero for civil judgments, and then look at the rows for those tricky exclusions. You can see the criminal act issue is still a factor for the others. But for AOR, the answer is just no. That's the trade-off in action. You're swapping those giant dollar limits for a stronger promise that they'll actually have your back. And really, this list is AOR's entire reason for being. This is their core promise. They're built to cover you in all the messy, complicated, real-world situations that make traditional insurance companies really nervous. An incident in a gun-free zone, maybe you had one drink, even a domestic situation. These are the high-risk events where their custom-written policy is designed to shine when others might just walk away. So, after all that, what's the bottom line? Well, it should be pretty clear by now that there's no single best plan for everyone. It just doesn't exist. The goal isn't to find the perfect plan. It's to figure out which one is the best fit for you and for the kind of risk you're most comfortable with. Ultimately, it all boils down to one question. What keeps you up at night? If your biggest fear is that your provider could go bankrupt, you're going to lean towards a traditional model like USCCA for that financial stability. But if your nightmare is getting a denial letter because of some fine print you missed, then AOR's promise of maximum coverage certainty is going to be really appealing. And hey, if your top priority is just the lowest price for a lawyer and you're willing to roll the dice on that massive civil liability gap, then a legal service plan is an option. So in the end, remember this, when you're looking at these plans, you're not just picking a list of benefits, you're choosing your risk. So the question you have to ask yourself is, what's the bigger threat to you? Is it a policy's fine print that might fail you when you need it most? Or is it the company behind that policy failing altogether? That's the real choice you have to make.